on these and other market trends are two of our regular market analysts, Walt Hackney and Doug Jackson. Gentlemen, welcome back. Well, good to see you. Doug, good to see you. Let's talk first, Doug, about what's happening in this grain market. 390 plus on Chicago wheat. Looks fairly attractive. Can we see a rally from here, or should people look at making sales?
Well, the wheat market, Mark, has been kind of unpredictably choppy here in the last few weeks. We're trying to make the transition from old crop tightness to the anticipation of a larger new crop situation. And then we're debating, the market's trying to debate just whether exports are going to exceed current USDA projections or not. They're running pretty much in line. Earlier, the market had expected much stronger exports, and yet this week we had 1 million tons of sales. So we're in this transition phase. We have some private analysts projecting a much larger new crop next year, which of course is anybody's guess given the wide range of yields we've had in the last 2 years of unpredictable weather. But the wheat market suspects that we can drift lower later. And as some private analysts are projecting sharply lower prices with good weather. If the world production rebounds, which is a big if, we can see a surge in production next year that would find Eastern Europe exporting as well as the major conventional exporters and certainly be bearish. But that's all in the future with a lot of weather questions to be answered. But we're probably in the process here of sort of rolling over, putting highs in for the season, looking to drift lower later in the season towards seasonal harvest lows. So this thing may not have the high price potential that people thought at one time. Probably any kind of small rallies on ongoing export sales or chances to lighten up this old crop inventory.
Alrighty. Talk about the corn market, Doug. For those out there who maybe have not made sales or didn't like the first year, there's a little bit of carry there. What's your outlook for corn?
Mark, I think the corn market here, assuming that we don't get a major production surprise in the January 12th final production report, is really probably a down 10, up 10 item. Not real exciting. Plenty of inventory. Stocks building a little this year, but not as much as we thought. But one that may just, the funds are heavily long here, which is a little bit of a problem, but with what else is going on in the other grains, that may be able to be maintained. The interesting aspect here, though, is the new crop corn. I think it doesn't take any imagination at all to project a 10.4, 10.5. We even see some 10.6 billion bushel record demand projections for next year. That's assuming increased ethanol usage and less exports out of China. That's going to make it mandatory that we have a record crop, a record yield, and anything other than that, the stocks go down. That's going to limit the downside. We think new December corn is cheap here. Any kind of a weather problem, real or imagined, next year, and it explodes the upside, and that helps hold the old crop here. So really, if you've got a lot of patience, a lot of ability to hold that inventory, don't need the money, plenty of storage, we'd hold it for a long-term perspective that we think is very optimistic, explosive with any kind of weather problem. But the key here would be patience. If you need money in the short term, need to make sales, again, a small rally of any kind, 3 to 5 cents, is probably going to be met with good farmers selling, unless you want to make a bet again on that January 12 crop report.
Okay, so you're definitely in the sales mode, but just whatever the market gives us an upturn.
Well, small rallies are meant to be sold in the short run, but again, bullish long term.
How would you do that then?
We just hold the physical inventory, you know. Again, of course, we can replace it with futures if we need to secure that cash. We actually have an opportunity to do that, Mark, with July futures about 5 cents over the new December. You can sell that cash now and buy that new December futures, replace that ownership at a discount. And our historical studies suggest that by summer, that July should drift under the December, which would make owning that December even more valuable, more worthwhile to look at right now.
Let's talk about soybeans. Again, a little bit of a damping we talked about this week. And we also mentioned the holidays certainly are playing a factor in this market. What's ahead for the soybean market? Obviously, a little bit bigger number maybe in Brazil.
Well, Mark, the soybean situation is very complex, very interesting. We have a diametrically opposed set of circumstances where the United States is literally on a glide path to run out of beans at the end of the year. Stocks in March this coming spring will be at 20-year lows. Simultaneously, on the 1st of March, assuming the weather stays relatively good in South America, we'll have record ever supplies in the Western Hemisphere. We'll have 120 million tons of beans in the Western Hemisphere. We'll have more beans in the Western Hemisphere in March than we did in September. So while many market observers are very bullish, very optimistic, we're actually moving from a period of time when we had less beans to more beans. The problem is they're not in the United States, and that's where the futures market is. The market's trying to decide here whether record supplies in South America can offset shortages in the United States or not. Some people think they can, some people think they can't. Some people think they can ship 12 million more tons or 20% more than they did a year ago from March to August to offset our shortage, and other people don't. It's going to be fascinating. You have people out there that think $10 beans are in the cards. You have other major commercials that think the thing is over with and will drift lower to reflect these huge Western supplies. We think it's going to be very difficult for South America to ship enough, fast enough to offset our shortages here. It's going to keep this bean market scared to death all year long. Funds are heavily long, but they may hold that length all the way till next spring and summer to see if South America can ship those beans. We'd probably hold inventory to bet that South America can't ship enough, fast enough, but it could be very volatile and very choppy. And the market did not perform well Friday after we had 1.1 million tons of new sales announced to China, and we were only up a few cents. Cash markets are very weak, and yet China's buying for possibly political reasons. The market had trouble digesting what that really meant on Friday.
Alrighty. Well, it's going to be an interesting scenario in soybeans as we go forward. Again, physical inventory, you're saying.
We hold on for that. Just hold that cash inventory for that problem in South America.
Alrighty. Let's turn over to the livestock business.